news out of Washington that there's a 5-day delay in the Iranian missile attacks. We are still right in the middle of this news. Washington is going to delay bombing Iran's infrastructure for 5 days because Trump said that Iran and the U.S. were in constructive talks. Iran says that no such talks are happening, and they're not interested in negotiating. So I find this this news event to be just fascinating from the perspective of a historical. Just have we had anything really like this in history? No, we really haven't. And if you look at the move that this created in the pre-market time frame, these are 15-minute bars here. This 15-minute bar went from 65.06 to 67.40 to 67.40. So we're at 6,500. That's a 250 point move in one 15-minute bar. A 250 point move in one 15-minute bar. I don't remember when that's ever happened. It's a illiquid pre-market time frame. And then the question is this: has the dollar invalidated in any way the indices downtrend? And the answer is no. The dollar is still going straight up in extensions. All we've done here is we've revisited the bottom of a gigantic bull flag. Now we're going to find out in a moment where bank gaps up into in just a moment, but we are still, even if we were to break this smaller resistance level, we're still in a series of daily shorts. Has bank invalidated the downtrend on the indices? No, it is not. And then the question is as well with the VIX. Zoom out for a moment. We're in a brand new contract. The VIX is running right into the bottom of its range again. Now we're back at the actual entry that we were inside of the day that we were going or coming out of the brand new VIX new contract. And why is that important? Because Wall Street always gets its fill. Wall Street always gets its fill. If there's an important support level in a series of longs, Wall Street will get its fill into it. If there's a new series of shorts, we will squeeze into resistance. And for many, if you're looking at this from the perspective of the brand new contract, yes, we rallied away from the VIX's support level in the brand new contract on the very first day that it was the front month. But for most of Wall Street, they're sleeping. They're absolutely sleeping. Yes, we broke the middle of this range, but we ended up right back at the bottom of the range again. So we broke the middle of it, certainly. And we should always be cautious when we trade back up into the top of a range, like we did in the early pre-market timeframes. But now we're right back at the bottom of the range. So we're going into our morning sitting inside of a support level on the VIX in its new front month being the April contract. The same is true for the indices. We just expired the old contracts last week. And so in theory, I mean, Wall Street hasn't really had an opportunity to even trade, in theory, the new June contract. And look at what we have squeezed right back up into. Now, we came into a June halfway back short on Thursday last week. Look at where the target is. I know this isn't a perfect touch. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.